In this video, we're going to talk about Biogen. If you're considering buying Biogen in your portfolio, then please keep watching this video until the end, because it'll cover many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $286.14 and closed at $395.85. The lowest point at which it fell to was $286, and the highest point it rose to has been $468.55. Compared to the current price action, its 52-week low was $223.25, and the 52-week high was $468.55. The current trading volume of Biogen is 18 million shares, compared to the average volume of 1.1 million shares. Recently, a new product from Biogen has been approved by the FDA, and this has sparkled an interest from the financial market, and many investors believe that the stock will now take off from where it is to a much higher level. This is why we're looking at an increase of a staggering 17% increase in the trading volume. This tendency may maintain itself for some time, but as per usual, the momentary optimism does have its limits, and the market probably needs a few pullbacks and corrections before resuming this upward trend for good, which I believe is likely. Now, let's take a look at the enterprise value of the company, which represents how much the company's assets are worth once the debt is removed. Unlike its stock market cap, the enterprise value of the company remained mostly constant throughout the periods, from $46.5 billion at Q2 of 2020 to $48.2 billion at the present day. This means that the company has managed to keep its core values at a relatively high level, and that regardless of the market evolution, this is a good sign because it means that the company has actual value, allowing it to compete against other companies within the same sector. Another outside signal to observe is the total amount of shares outstanding. Generally speaking, if the number of shares keeps increasing, it suggests that a company is selling itself to pay the bills. The total amount of common shares remained constant and even decreasing over time. This is an excellent news for new investors because it means that the company will no longer be diluting investors to raise money. Given the size and the track record of Biogen, I would argue that it no longer needs to do so in order to raise capital because there are other means like bonds. The price trend of Biogen is similar to many other startups in the takeoff of 2020, with one key difference. It happened much sooner, almost a decade earlier, than most of those companies that started to attract people in 2020. Biogen stock peaked around 2015 and has been trending slowly downwards since then, before spiking once again recently. This is typical of the sector, and I would argue that it doesn't hurt that much for it to correct its stock value during that period of time because it does allow investors to get in at a lower price during this period of 6 years. Regarding its recent development, I would say that in order to keep us from fearing about missing out, I suggest having a small position in it from the get-go and increase the holdings when there is a correction. As of now, I consider Biogen as a maturing and established company that can be bought at a higher percentage in the portfolio. I would say that anywhere between 8 to 10% is a healthy exposure to it. Once again, be very careful about the pace at which you would be buying it and the stock, and to stick to it. From the price action patterns, we're probably going to see a glimpse of whether the stock has enough steam to go upward. In my opinion, it does, but it does require a few pullbacks. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money into innovative growth stocks. Of course, with Biogen, there's a bit of an exception for the time being. We're now over the stock craze of 2020, and most investors decided to pull back massively from the entire disruptive and innovative growth stock sector, covering biotech, EVs, and anything requiring keynote presentations to woo the investors. Going forward, the focus of the market will get back to financial stability, the longevity of the company, and whether this company has good and solid financial outlooks. In other words, blue chips have once again taken over the startups as the go-to investments for money managers. In the current circumstances, the recommended approach is to be careful when buying stocks. On one hand, the stock may be able to climb back on its own when operations take off, or, like Biogen, when a new product is authorized. On the other, the stock may simply increase because it fell low enough. This means that in the current market settings, we gotta tread the water carefully regarding when and how many shares we want to buy. Many of them have become overpriced over the past 12 months, and we may need to wait for another few weeks or month before the timing is once again right to increase our holdings. Now, with that being said, it's clear that many stocks are now recovering from the sell-off earlier this year, and I believe that the timing is good to target those companies, such as Biogen, that have been oversold or just simply under the pressure over the past few months in order to make rapid gains, as long as we are careful in pacing the amount we want to buy. Of course, there will be sudden events that will create a lot of volatility for individual companies, such as the case for Biogen. And this is why I always recommend to keep a small position, regardless of what happens, regardless of the short-term price action. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.